Good afternoon, everyone. Now we are starting with our next session. It is my great honor and pleasure to introduce our next eminent speaker, CA Mehul Thakkar, sir. He is a fellow member of Institute of Chartered Accountants of India. He is a rank holder in examination conducted by ICAI. He has vast working experience of 25 years as a practicing CA. Being an expert in a field of direct taxes, he has hand-on experience in providing the advisory services, handling assessment, reassessment, assessment in such cases, and first appeal. He has successfully argued various matters relating to the direct taxes before Income Tax Appellate Tribunal, Ahmedabad. He also has an experience in providing the advisory services on the matter pertaining to FEMA and international taxation. Sir has also authored a comprehensive book on direct taxes law and international taxation. He has also authored e-book on practical aspect of Finance Act 2010 to 2021. He is affiliated as a member of Income Tax Appellate Tribunal Bar Association Ahmedabad, Chartered Accountant Association Ahmedabad, co-opt member of Direct Tax Committee Ahmedabad branch of ICAI 2019 to 2022, member of All Gujarat Federation of Tax Consultant. He has also been a keynote speaker at the various branches of ICAI and ICSI, CA Study Circle, Chartered Accountant Association Ahmedabad, Direct Tax Committee ICAI, All Gujarat Federation of Tax Consultant, IT Bar Association, Tax Advocate Association, and Gujarat National Law University. With immense pleasure, I would request sir to facilitate me, Mehul Thakkar sir with memento. Okay, well, sir.
Thank you, Twinkle, for brief introduction, and thank you, Keval, for felicitating me. I'm thankful to all of you. It's a challenge has been given to me, as usual. Post-lunch lecture is always a challenge because two digestions are required to be done. One digestion, which is automatic, and second is that whatever I'm going to deliver, on that you need to be more focused. What I'll do is this, because close by close analysis, I know there is some panel discussion as well. So what I'm planning is, one, I would like to always address the gathering that we should charge fees properly. That is the always, in every lecture I convey this very important message to our professionals, brothers and sisters. So I'll definitely ask all of you to go back to the origin of tax audit. Because when we talk about close by close analysis, it has to be done in the context of objective of tax audit. We should always be clear about the objective of tax audit. And what my understanding is that hardly we look into objective aspect, and we just are being driven by various clauses, and they are over-flooding clauses over a period of time. I recollect my time of articleship, it was only 13 clauses. Out of 13 clauses, we had got only 7 or 8 where we were writing not applicable and nil. And it was very easy to prepare a tax audit report, provided you have verified the book result. Then to fill up 3CD is a matter of just 10 minutes. Because remaining six clauses you need to write separately, annexure, refer annexure this, refer annexure that, and report is over. And we are doing all manually. Very few were giving it even typewritten reports also. But over a period now, this led to 44 clauses. And honestly speaking, to perform a tax audit, particularly for a special clauses, which normally we encounter very rare in a particular audit, then I am sure that if all clauses are applicable to a particular client, all clauses of tax audit 3CD form are applicable to a particular client, then it is very, very difficult, honestly speaking, very, very difficult to perform a tax audit. Because you should have a sound knowledge of each and every provision mentioned in that clause. And each clause, particular provision may require minimum half an hour to 1 hour discussion to just understand that provision. And then if you'd like to just address litigation on that, it may take another 1.5 hours. So honestly speaking, it is going to be a very, very responsible job on behalf of Government of India Finance Ministry that we have to do this tax audit. I think now let me first of all share, I'm going to discuss in two parts. One, we are going to discuss objective behind introduction of 44AB that we'll look into. That part would be very minimal, and I'll definitely make you feel that we are so kind as a professional, chartered accountant, we are so kind that we accept burden. We accept burden voluntarily. We do not raise our voice against that. Even I was there at Baroda also, because after 4 years I am doing this session actually, honestly speaking. I was not inclined to, but Baroda there was a call from our beloved member. I could not say no to him. And immediately Surat called me, immediately Sunil Bhai called me that we have to also arrange the same session here. I'll tell you that we are so kind that we keep on accepting whatever government is unnecessarily adding various clauses in form number 3 city. And that's why even I told to Arpit Kabraji also that, and Mr. Ketan Bhai, that you should really seriously look into this. Because either you should change the law, Income Tax Act, for audit what we are doing it, or we should restrict ourselves that representation at least should be made to the government. Let me share with you objectives so that you can understand what I'm going to convey. Look at first part, I'll discuss objective, and second part, I'll discuss those clauses which very rarely we encounter in audit, but we need focus on that. So few clauses I'll look into those clauses. We cannot do all entire clause by clause, that is not possible. And I think it is 3:11, so I'll end my session at 4 o'clock so that panel discussion will have and you will have more chance to ask all your practical queries. Because I looked at even that Surat branch also. Baroda also I could not find time. Similarly, Arpit Kabraji and all team was there at that time. So I could not find time for a question answer. Now, honestly speaking, because this is all, but at Surat, we had a good dialogue on various clauses. Let us look at objective first. I'm looking at para 17.2, Stability Circular 387, dated 6 July 1984. This was the master circular. We know that every year budget proposal get approved. We have got Finance Act. And thereafter, CBDT issues a circular clarifying each and every clauses of this Finance Act proposal. So this is then 1984, circular number 387, para 17.2 was dealing with introduction of section 44AB. So now many members, young members will understand that these provisions were introduced in 84, Finance Act 84. What para 17.2 says, we have to think from the angle of 84. Okay. It says, proper audit for tax purposes would ensure that books of accounts and other accounts are properly maintained, that they faithfully reflect the income of the taxpayer, and claims for deductions are correctly made by him. Such audit would also help in checking fraudulent practices. Now, this is very interesting because we have seen 80G bogus donation. So these fraudulent practices, at least there should be some check. And very first line they said that books of accounts and records are properly maintained because it was a time of manual books were maintained. That was also needed. Then they write further, it can also facilitate the administration of tax laws by a proper presentation of the accounts before the tax authorities. Because presentation of account was also a challenge. And even till today also we do not have a structured format for proprietorship or partnership. We prepare and we present profit loss balance sheet in our way. And if you look at those who have done audit in my time, I have done from even villages also. And even I have had an occasion to do audit of those who are from Sindhi community. And they meticulously maintain accounts in Sindhi language. And if you look at Gujarati, they write Nafa Tota Khatu. You will be frustrated to understand that which kind of account they are maintaining. But it is profit loss account. So they wanted that facilitate administration of tax laws by a proper presentation of accounts before the tax authorities and considerably saving the time of AO in carrying out, now what they expect, saving time of AO in carrying out routine verification like checking correctness of totals. It was a fashion at that time. The trial balance should not tally. Intentionally, accountant would not tally. To at least make assessing officer understand that I have done best effort to tally. And we were absolutely doing wrong in our examination. We made full effort in our examination to tally it. You got my point. They are not telling will give a credit at that time. And verifying whether purchase and sales are properly vouched or not. Thus, time saved of AO, you can understand now what they said, could be utilized for attending to more important investigational aspect of a case. The very objective of tax audit when it was introduced in 1984 Finance Act was very clear that AO should not unnecessarily invest his time for verifying totals and vouching and verification. In short, 2 words, vouching and verification. So that AO can give this saved time for attending more detailed investigation of a particular case. That was the objective of this tax audit, what CBDT circular says. I will be surprised to read these 3 paragraphs of Bombay High Court. And definitely, even I request also Sunil to look into this, that what representation can be done. This is Bombay High Court in case of Gai Construction versus State of Maharashtra, 184 taxman 52. Where Bombay High Court had an occasion to ascertain the scope of 44AB. It's very interesting. I'm reading para 21. I'll read all the 3 paragraphs so that what the word I have spoken initially, that we are so kind, being a professional, that we keep on accepting burden and perhaps at the same fees. Even few more clauses are being added, we will continue our operation. You see, to write nil or not applicable also requires application of mind. That also had a cost actually, it should have a cost. It is not simply that this clause is not applicable though they added. Let us look at para 21. In order to ascertain the scope of 44AB, it is useful to note that in the year 70, Government of India had constituted a high-powered committee of experts under the chairmanship of Sri Justice K.S. Vanchu, retired Chief Justice of India, to examine and suggest legal and administrative measures to unearth black money to check the avoidance of tax area and to indicate the manner in which tax assessment and tax admission may be improved and for giving effect to the recommendation. Vanchu Committee finally submitted a report in 1971 December, and what Vanchu Committee says in December 71? They recommended mandatory audit at least in big cases. Now you understand, 71 was the recommendation and government took action in 1984. Bhagwan Ram 14 વર્ષ વનવાસ પછી આવ્યા પછી અમને યાદ આવ્યું કે આપણે હવે કંઈક a proposal હતી, we need to look into that. Now what again Bombay High Court is writing same thing. The recommendation was also with a view to saving considerable time of EO, which could then be utilized for more important investigational aspect of the case. So what we had seen CBT circular, same is the observation of Bombay High Court. And ultimately 44AB was introduced by Finance Act 84 with effect from 1485 for providing compulsory audit for non-corporate sector. Now let us look at para 22, it's very important. While stating in detail the need for a mandatory audit, what committee observed that Bombay High Court had noted. I am reading this paragraph. We therefore recommend that provision be introduced in a law making presentation of audited accounts mandatory in all cases of business or profession, where sales turnover exceed 5 lakh at a time or profit before tax exceeds 50,000. Now, by reading these 2 things, what is the observation, final observation of Bombay High Court? Thus, the recommendation for presentation of audit account was in all cases of business or profession and not in respect of entire income of a person carrying on such business or profession. This is very, very important. Bombay High Court says that the objective of introducing tax audit is just to carry out audit for what? Business profession aspect only, not for entire income. Now what we are doing it. And that is the reason this provision was a part of business profession chapter 4D. If you look at income tax chapter 4D is dealing with what? Profits and gains from business or profession. Among that group, section 28 to 44DA. In between, they introduced with section 44AB because the objective was very clear to carry out audit only for business and profession, not beyond that. And that again Bombay could write, it is this recommendation which were accepted in the form of 44AB of the Income Tax Act. They repeated also in para 23, same aspect. I am reading the relevant part only instead of taking much time on that. The same would apply in case of professional whose income is over 10 lakh per annum. It is this professional income Bombay High Court right. It is this professional income and not his income from other sources which should be covered by a provision of 44AB. So now you understood that we are so kind that we are doing audit for what? Various clauses. Which are those clauses? I'd like to highlight some of the clauses for our discussion, which will serve purpose of clause by clause analysis as well. Look at these clauses, which deals with income from other sources and reduction from gross total income. So practically, if you look at the way provision has been placed under the entire act, under the chapter or subchapter, it has been placed, number one. And number two, if you look at the Bombay High Court, number three, you look at the CBT circular, then definitely we are doing audit more than what is expected from us since 84. Let us read clause number 28. Clause number 28 is nowadays not relevant. It is talking about 56 to 7A. Clause number 29 is 56 to 7B, which deals with consideration received for issue of shares, and that consideration exceeds fair market value of shares as referred to in section 56 2B. If yes, please furnish the details of the same. Now, if you open the clause form number 3CD, it writes only 4 lines. It doesn't write which detail need to be furnished. And I had a call, one of our very renowned valuer, he was also at GIR for delivering lecture. So he had given me a call that, sir, how to report this cost, clause 29. I said, I need to open it. Let us read our guidance note also. And then we discuss on that aspect. It's very interesting because it doesn't say what to furnish. And very interestingly, our guidance note also says working paper should be collected, that's all. Guidance note said that in this format, you should prepare your working paper. Keep it working paper to fill up this information. It doesn't say you should report all this. This is all you know. This is nothing but shares issued at a premium by a closely held company. There we know that valuation need to be obtained. And in that also there is a loop into loop. If you look at the act, then there are 2 clauses, A or B. B clause is a very open clause. Any other valuation which you can substantiate to the satisfaction of AO. So that was also one of the discussion. So what to furnish detail is also again a professional judgment, but ideally the intention of their department is to put this clause in 3CD is what? If any income is to be taxed in the hands of closely held company, under this clause, then that they want from us. Therefore, ideally what we need to do is we need to give entire detail, that shares are issued to whom, the name of the person is PAN, then what is the consideration charge, what is the face value, what is the premium amount, what is the fair market value. And then that fair market value, you should specifically mention that if report is being obtained from a particular registered value or merchant banker, then you should specifically state that this person had given the, he had ascertained the fair market value on so and so date, and then any difference is coming which is taxable, then you should show it. That is actually the objective behind 3CD. But if you look at the language, it says simply that issue of shares which exceeds, consideration exceeds fair market value of share, then and then you furnish the information. So we can take a other view also. If it is not exceeding as per my working paper, then I should not report it. That view also can be taken, but our guidance note does not much throw light on it. But it is all a professional judgment for every clause. Look at 29A. I think now we have got 56 to 10, which is applicable. So 29B is applicable. But what I'm trying to point out, these are the clauses relevant to income from other sources. While Bombay High Court says scope should be limited to only what? Business and profession. So 29B says whether any amount is to be included as income chargeable under the head income or other sources under clause 10 of subsection 2 of 56. Here if you read, here they ask specific information. If answer is coming yes, then you give information related to nature of income and amount thereof. Now you all are aware of 56 to 10. Honestly speaking, we understand this as a gift transaction, but actually it is not a gift transaction. Law does not write any word of gift. Law writes word what? Sum of money received without consideration, or movable property or immovable property received without consideration, or movable and immovable property received for a consideration. If it is a case of immovable property, then less than circle rate. And if it is a case of movable property, then less than fair market. Law does not write word gift. And that's why this, you see this controversy started of bonus share. Bonus share is also a share received without consideration primarily. So would it be falling under this? This controversy all started, and this is now going. I think tribunal judgments are there on that. So here the idea is Loss is sum of money received without consideration. That is the idea. Normally we call it as a gift for our general understanding. Here also you should look into the exception. The exceptions are very tricky, and they kept on adding the exception, more particularly where transactions of business reorganization takes place. Because they realize at a later stage, because in business reorganization also that this kind of transaction takes place without consideration. So in that case, you should also look into those exceptions. But here they are very clear that you should give nature of income, whether it is a sum of money, whether it is a mobile property, whether it is a immovable property, and you should also quantify the amount taxable under 56(2)(10). Then they expect us to give a details of deduction if any admissible under Chapter 6A or Chapter 3. Chapter 3 is more or less, it's not an exemption. More or less it is like Section 10A, 10AA. They are more of deduction kind, proportionate depending upon your income, and they are mostly now not operated. But they expect us to give details of deduction under Chapter 6A. This is also, they are crossing the limit, scope. Then 36A. This is very important, that I was just sharing it, that each clause requires long discussion. Like this is whether an assessee has received an amount in nature of dividend as referred to in subclause E of clause 22 of section 2. So 222E, this is a dividend, or we can say loan or advance is given by a closely held company to a shareholder. So every closely held company, if it had advanced loan, it had given loan or advance to a shareholder carrying certain percentage. I'll tell you, 222 itself requires discussion of 5 to 6 hours, if you would like to study in detail, because dividend is always connected with accumulated profit. There is a concept, like if you go to audit, there is a concept of divisible profit. Here we have a concept under Income Tax Act is what? Accumulated profit. And accumulated profit itself requires 2 hours discussion. It is such a strange inclusive, exclusive definition one should look into, and including look at the, since this clause was available since long, even under 1922 Act also. So you look at various judgments of Supreme Court and High Court, you will find it on this. But primarily, and you need to look at these circulars also. If this loan and advance is arising out of business transaction, then circulars have relaxed the taxability under 222E, considering the judgments of high courts. So that also you should look into it. Here also they expect us to write the amount received as well as date of receipt. Honestly speaking, if company has missed to treat it as deemed dividend, then they definitely would have missed in deducting TDS as well. So when you are doing audit and you find this transaction had really taken place, I'll suggest that TDS compliance should be made immediately, though it would be a late. But if you point out as an auditor, and if company is agreeing that yes, there is a loan or advance to a shareholder or an associate concern listed under 222E, then if no TDS has been deducted under 194, then immediately that step should be taken. And then that would be a great ground for relieving yourself from penalty. Because this is something not a normal provision, it's an exceptional provision. What my suggestion by reading this? My suggestion is that you omit 44AB. Like we know in GST or earlier central excise or custom, we have a separate chapter. We had a separate chapter under excise, which is called excise audit. Separate chapter, which takes care of everything, which takes care of valuation, which takes everything. You got classification, everything. So there should be a separate chapter under the Income Tax Act called audit of total income. Then it would justify. So my suggestion would be that we should represent, there should be you struck down this 44AB, and there should be a separate topic, that there is a new provision of what? Audit of total income, because in effect we are doing audit of total income. Moment this new chapter will come, we can charge again more fees. Conveying to the client that you see there is an amendment in the law and these, and otherwise we are doing unnecessarily business profession, we are doing entire audit. Look at few more clauses which I am not able to digest even till today. This presentation I prepared somewhere in 2019. Look at these more clauses of transfer pricing. I am sharing few clauses. Why I am sharing? These are mostly nil and not applicable. Mostly when you carry out the audit. But if it is being there, then we need to be more attentive. Look at this 30A. 30A says that you should submit information pertaining to primary adjustment under section 92C. So we all are aware that whenever international transactions are carried out or specified domestic transaction has been undertaken, In that case, we need to establish that that transaction had undertaken at arm's length price. If it is not so, then we need to work out arm's length price and we need to work out the adjustment to be done to the total income. So now they expect us to give this information in 30A. 30B says you also provide information pertaining to excess interest in a manner computed under section 94B. That also you look into it. There is a complete mechanism given, 94B of the Act, where certain portion of interest claims need to be disallowed. And clause 43 says you should provide details pertaining to, information pertaining to CBC, country by country reporting under section 286 subsection 2 of the Act. Now honestly speaking, you all are aware, we are all chartered accountant. We know that there is a special audit for that. Am I right or not? There is a special audit, there is a special form, 3CEB. If there is a special audit for that, special form is there, then why you expect chartered accountant and burden them? Even there is a special time limit also. There is an extra time limit for completing this audit. Then why you unnecessarily burden it? Simply because you are an authority and it is coming to your mind that this information we require. And you expect chartered accountant to certify true and correct and true and fair, whatever they want. So my suggestion is that these clauses, if you really want it, to incorporate into a different audit. Why you unnecessarily burden CA even to write nil and not applicable? Look at one more, which is amazing. Clause number 30C. Information pertaining to impermissible avoidance agreement under section 96 of the Act. I first of all expect honest raise of hand from you. How many have opened and read section 96? Honestly. Be honest with you. This is the fact. It is all about general anti-avoidance rules, GAR. And I'll tell you, just to read and deliberate basic on that, it will require 3 to 4 hours. And after we finish the discussion on GAR, I bet you that we will come to one conclusion that everything is overlapping and everything is doubtful. And it is very difficult to carry out audit of any person. Thank God here we have got some, we can say, threshold limit. That's why we are not to worry for a routine client. Otherwise, this is going to be very difficult to put a comment here, because I have to put a comment here. Various comments I can make it, like one is not applicable, one is nil, or one comment is I have not come across to any such transaction which is leading to impermissible avoidance agreement as stated under section 96. Therefore, my suggestion is there should be an independent audit for this itself. And you should mention certain criteria for this audit. More particularly, there should be international transaction kind of thing, or there should be some X, Y, Z amount of turnover of a corporate or a non-corporate. And you prescribe some threshold and there should be an independent audit, so that those who are expert in this, those who are dealing, they will get a scope to look into this. And department will really fruitful way, they will get information pertaining to what? This GAR. So this is what I wanted to, one more clause. This clause, I think last year myself and Sunil Sanghvi and we were invited to give our suggestions and edit certain clauses of guidance note of 3CD, tax audit guidance note by ICAI. So Chitle sir and we were discussing. He said that you should not worry. We will make general clause how to write not applicable here. But finally, when guidance note came, it was something completely U-turn. He said, I recollect, he was here also. He said, you wait up to 16th August. By that time, we will come out with some proper clarification on this. When I read this clause, one word I love. First word is break up. By reading this, we love to break up with this clause itself. That let us have a break up with this clause. Break up has got various meaning. It says break up of total expenditure. See the word total. When I say total expenditure, we are all chartered accountants. We know that there are 3 types of expenditure. That is capital revenue and deferred revenue. So they expect us to completely give a breakup screening the total expenditure of entity registered or not under the GST. My suggestion is that if you want this particular information, expect separate return, annual return. You should have annual return of what? This breakup under GST Act. So we will get some extra remuneration as well. You see, this is very tedious job and very risky job as well. And we cannot have clear data even from the client. So this is, now you understood what I'm trying to convey. The first part of the session is over. I'm trying to convey is that we are kind, we are generous people, and we are taking burden for the same fees, and we are reporting for total income. Now we have exceeded our jurisdiction, and we are reporting for GST also. Ideally, that this job need to be done under GST Act, but somehow they would like to always cross-check. I don't know what they want to cross-check. There, if you really look at, you just search it. What government since, I think, 2000, I have got one paper on that also. I given a lecture on that. But I think 2017 or 18 onwards, they invested thousands and thousands crores for data mining. Just look at it. They have got an expert team. They have got a subcontract with 100 plus IT companies. Expert team dedicated 100 people who are IT people. And they are really coming out. You see, our notices now we are getting under 147, 148A notices or direct 149. They are perfect notices. Their information is very sound. Earlier, the information was without verification, but now their information is very sound. So ideally, they are working on it. So they can really extract data from GST. They themselves can do this job. They've got a team for that. So they can call GST department, you give data for this client, complete data, whatever returns he had submitted, and from that, if they want this kind of breakup, they can work out and they'll check it out. And if they find something wrong with income tax, then they can issue a notice. Why unnecessarily they are harassing people like us, very kind people like us. Let us go to now second part. I'll just deliberate on very few clauses, very important, very exceptional clauses, so that intimate कर देजो. Next team ने 4 वागे आवानो. એટલે પાછું એવું ના થાય કે ભાઈ I got a call that you come late, no worry. એટલે એવું ના થાય. At least the clauses which require special attention when we finalize this form number 3CD. I'll share this. I have given clause number and I have given source also, so that one can immediately refer it. First, I think we had a session recently of applicability of tax audit. Would you love to really discuss on that? Then I think half an hour will get finished there only. And still I'll try my level best to clear the confusion. But how many of you want really applicability of tax audit would like to discuss? Badaji confusion ma jaye. How many of you want to continue right now? Let us ask special question and straight away question. Agaji બધા ઊંઘમાં ઘણા થાકેલા બહુ છે એમ સવારથી તમે અહીંયા છો and you have got a special dose from WIRC team also. Because I had listened that at Baroda. They're really doing nice and innovative ideas they are coming out in the entire team, young team. Okay, let me just brief it. At least I request that you should mention correct clause. Clause number A, B, C, D, E. So we have got 44AB. Clause number A is a routine audit where it is applicable to those who are carrying on business. And turnover exceeds 1 crore carrying with certain proviso. You are all aware of proviso. I'm not going into it. Second is dealing with clause number B, person carrying on profession, where his receipt in a profession exceeds, gross exceeds 50 lakh rupee. Clause number C, D, E, we will slightly deliberate right now for a minute, 5 minutes, 3 to 5 minutes. Clause number C, applicable to those whose income from business deemed to be under 44E, 44BB, triple B. Double B, triple B I am not addressing right now. It is more pertaining to non-resident. 44A we are all aware. That is those who are engaged in plying, hiring, leasing goods carriages. Gadar number 2, main likha gaddi leke. So that 44E, it says he claimed his income lower than profits and gains so deemed under that section. The this clause is very clear. Clause number C is very clear. If person is falling under 44E and is reporting income lower than what is required under 44E, depending upon heavy goods vehicle and other than heavy goods vehicle, then in that case, audit is must. Audit is must. And if you really cross-connect with that, 44AA, maintenance of books of account, there also there is a clear mention about this, that they have to maintain books of account if they declare lower income. So here there is no criteria of total income concept. Simply income declared under business profession lower than what is required to be minimum under 44E, audit is compulsory. Now look at D is slightly different. D is dealing with those who are carrying on profession. And that profession is again specified profession, not all profession. Therefore, that also one need to distinguish, because there is always a question among young members that, sir, whether I am falling under 44AD or not. That altogether a big challenge. You need to see the list of 44ADA. And again, a question may arise, 44AD versus 44ADA. Because if you look at 44AD, 44AD says this provision of this section shall not apply to number 1. Those who are carrying on specified profession as referred to in 44AA. That means a question may arise that those who are not covered under 44 ADA, those profession, will they fall under 44 AD is also a big debate. The way they have amended the law long back, because our chartered accountants, tax advocates started reporting 8% profit earlier when this 44 AD was not there. But they feel that ours is also nowadays business only. Practically, we are also working 24 hours. Business are also working. We are a service provider. Is it fact or not? And I'll extend, because luckily I had a chance to read certain spiritual granth also, Bhagavad Gita. So now I feel it that we are in a service provider class. And service provider is put in a category of Shudra. Brahman, Vaishya, Kshatriya and Shudra. So we are in a last category because we are a service provider. And service provider, IT is also a service provider. We are also a service provider. And we are also taking base of IT for providing services. And every day we are hitting our head against what? CPC wall. Am I right or not? CPC wall, it's a firewall. And we are nothing but a virus to them. And every day we are suffering. So this clause is very important. 44 ADA says, if your receipt is, I'm not talking about the 75 lakh right now, if gross receipt is less than 50 lakh, and ideally you need to report 50% minimum income under head business. If you are reporting less than that, number 1, and you read minutely, and there is a word written and, oh God. What it says, the word, additional word is written, and total income. And total income exceeds exemption limit. So there are twin conditions. Condition number 1, I am reporting lower income than the prescribed percentage of that section. And second is, and my total income exceeds exemption limit. Only then that audit need to be carried out. I think there was a call from one architect. He was also now studying Vedas. So he stopped working almost. He has got few fixed contract. So his receipt was 15 lakh and profit was 3 lakh. It was all of more of government contract kind of thing. And he had a question that whether I should go for audit or not, because it depends on due date also. Due date will also undergo change because of that. So he was quite confused discussing with his chartered accountant. So he was, through common friend, he called me up. And he had got a housing loan interest of 2 lakh deduction. So taxable income was hardly 1 lakh. So as such, he does not require audit in that case, even though he is reporting lower income. Next clause comes very important. That is, those who are falling under 44 AD subsection 4. Those who are falling under 44 AD subsection 4. If that would be the case, 44 AD subsection 4, only then last clause would be applicable for audit. So now we need to ideally understand what is 44 AD 4. I'm not investing much time on that because you might be aware of all this discussion. Applicability. But there also, there is an additional condition that you are falling under 44 AD 4, that is first condition, and total income exceeds what? exemption limit. So there also there is a concept of total income. So that you need to be careful that you always check it the other condition. So here also there is a word and total income. There is a big tragedy actually. If you look at 44AA, it does not give reference of 44ADA. And that's why there is a question that whether professionals are required to maintain books of account despite reporting more than 50%. This question really is a very sensitive question because there is no reference under 44AA exempting this category or requiring them to maintain books of accounts. But one will find memorandum. Memorandum gives clarity that if you are declaring 50% or more 44ADA, then no need to maintain books of accounts. Section is not giving clarity. Let us look at very important clause which I'd like to address in detail. Whether SSC has, clause number 8A, whether SSC has opted for taxation under section 115BA, BAA, BAB, BSc and BAD. Now we know these are alternative tax regime. Honestly speaking, I congratulated Vishal Doshi, our Board of Studies Chairman, ICAI. I said that you did a wonderful job because new syllabus has been introduced, you all are aware. And he had not done a parallel exam job. Old and new will continue. No. Old will 100% discontinue. This is the job ICAI had done this time. That means everybody is under which syllabus? New syllabus. And I think he was sharing, Vishal Bhai, that we had 32 alternatives because some were still appearing since 1990, 1985. Those are still appearing in examination till today. Very brave people. One or two students. We can say students then, of course. So I love this, but our finance minister, she created confusion. Lots of alternate tax regime, and now to make alternate tax regime popular, ultimately what they want that we should not claim exemption deduction. If you want that we do not want to claim exemption deduction because we are doing something wrong as a citizen of this country, then you abolish immediately. You are an authority. We have elected you. We have no scope now. Can we change government right now? No. We have to suffer it. Every government we suffer, either this way or that way. It's a fact. If you read scripture, Srimad Bhagavatam, there is a special verse on it, that economic development will not solve your problem. Any new government will not solve your problem. Unless government follows dharma. Then there can be a solution. Otherwise, there is no solution. So it's a fact. So nobody can make us happy unless we want to make ourselves happy. So this is, I love it. Now, duty cast on us is, we need to write whether SSC has opted. Now, take a case where SSC is opting for the first time. How we know him, know about his judgment, unless we talk to him. It may happen, he may change his mind at the time of filing return because we have got 1 month ahead. Audit need to be completed by September, while return need to be submitted by October. He may change his mind. And change of mind is very common nowadays. You see, many divorces take place. Change of mind is usual now. People immediately change it. And before marriage, there is that you know all. I would not like to address on that much. But the point is, now they expect auditor to read somebody's mind, which I didn't love actually. How can I read somebody's mind? Therefore, now ICAI says what you should do it, you should take an undertaking from him, that he is going to opt for this section. Why this is very important, this clause? Because this will have an impact of claim of depreciation. This will have an impact of carry forward of losses, because you know that certain, more particularly for corporate, there is a clear-cut law that if losses pertain to this special deduction, then they will not be allowed to be carried forward. So then chartered accountant, even you need to do adjustment in depreciation schedule also. That's why it will have a bearing on this. Therefore, what you should do is, you should obtain a declaration if it is a first year case. If it would not be a first year case, then you know that mostly it is irreversible case. These options are mostly irreversible, or exceptionally in 115 BSc, you will be allowed to change once in a lifetime. So just you look at this clause very minutely, and if you are your client, your audit, and he's first time he may opt, he may not opt, then you should obtain at least a declaration whether he's going to opt or not going to opt. Next come, very important, ICTS. Honestly speaking, this was challenged a lot, you know. I think it was 2016 Finance Act. And ICDS were introduced and postponed also. Reporting was postponed. I think a year or two it was postponed. And I still recollect our Milin Bhai was a part of this committee. K.C. Mehta and Company, Milind Mehta. He was also a part of this ICDS committee of government committee appointed. Honestly speaking, these are the standards. And we know accounts like anything because we are chartered accountants. And we know various standards. And when I look at various standards, then I feel that sometimes we behave different standard with different people. And that is what exactly we adopted for different reporting under different act. We got different standard. Here the focus is what? Income computation disclosure standard. And despite this, there is an amendment under 145 section also, that if ICDS are not being followed, then assessment shall be carried out under section 144. Whatever practice I am doing it and whatever the circle I am associated, I have never seen that AO had given this notice. Therefore, you should not worry. AO does not know much about ICDS. It's a fact. It's a fact. Though you may not agree, but it's a fact. But the idea is we should take our responsibility properly. We need to take our responsibility properly, and I recommend that you must read it. Each ICDS, along with relevant provision, like look at fixed asset, then there are various provisions affecting that. So I request that you read it minutely, and when this ICDS was introduced, immediately Direct Tax Committee had come out with a reporting guideline. So that guideline also one should look at, because that gives you origin, that what our committee, Direct Tax committees, I'm not going to discuss in detail. I think ICDS also had taken care of. Given the reference guideline, and even recent ICDS also you look into it. But you must do disclosure. I have seen some audit report are without disclosure. That should not be done. This is nothing but a gross negligence. At least whatever policy, accounting policies have been followed, or particular ICDS is not applicable, you should mention it is not applicable. You should not keep it just blank, this entire area. Then comes 145A. Method of valuation of closing stock. Must look at this 145A. I have covered here 145A. What 145A expect us? It expects us to state sales, purchase, stock, everything to be inclusive of taxes and duties. That's what they expect, that adjustment. But we know that our accounts are being maintained exclusive of GST. So this is the requirement of 145A. Now interestingly, I find this kind of question from young member, and even perhaps I have came across one judgment also of ITAT with regard to 43B, disallowance of taxes, duties not paid on or before due date of filing return, where the argument is that when I have not accounted taxes, duties in my profit loss, then how can there be a disallowance? That is the argument. And I think I came across somewhere, somebody had shown me one judgment also, where the court was convinced, tribunal was convinced that, oh, disallowance cannot happen if it is not routed through P&L. I'll tell you, this is the section. 145A is a mandatory provision. It says that sales purchase need to be stated with duties and taxes. If sale purchase you state with duties and taxes, definitely GST would appear as expenditure in P&L. And therefore 43B otherwise is also valid, because you are debited to P&L by virtue of provisions of Income Tax Act. Forget your accounting aspect. By virtue of provisions of Income Tax Act. So these also need to be done. And if you are just following exclusion, if you are confident it will not have any impact on that, then you state that way, that accounts are being maintained exclusive of this, and it will have no impact on that. That way also you can give your statement. Next comes, this is very important, which has created a chaos because of CPC, clause number 16. It says amount not credited to profit loss account, being A, B, C, D, E. Each one is very unique. And I have given a list of sections, one should look into it. First itself says items falling within the scope of section 28. I'll tell you, scope of section 28 has been enlarged. One should really look into it. Therefore, every budget proposal affecting section 28, one should really look into it. I'll tell you one of the advisory which I have been sought from some Malad client recently. I'm about to close that, but it's a very interesting case. so that you can understand what I'm trying to point out here. The case is like this, that some company was running short of fund and they would like to participate in one-time settlement. Now, still for one-time settlement, they were not having fund. So what they did, they agreed for one plot of land. Some construction was there. They agreed that we will give you a development right. And this money you should give it, we will refund you that money as well. And it was further agreed that this money does not carry any interest. Only obligation on the company is to give development right of that property, and then there will be a development agreement in future. We'll do it, how to share the proceeds and everything. That was the benefit that LLP who is funding for OTS. Now, company had not kept its promise. Matter was carried to NCLT. They agreed. The question was whether it is a financial creditor. NCLT agreed it is a financial creditor. Asked them to refund 4.25. NCLT says that how much should be compensation, that is not our area of discussion. We will not discuss that. You should settle under other law. And now it is agreed that they are going to pay hefty amount, almost 3 times of what originally contributed. The original amount contributed will come back, and additional, they will get 3 times more amount. Now a question may arise whether it is a business receipt or not. And unfortunately, that LLP was set up only for this project. Now this project is not going to happen at all. LLP project is just to develop a particular project. So this is also a case, and a question may arise, if we take it as a business transaction, then what will happen? Then it would be reported here, section 28. Or if we take it, it's a capital transaction. There are judgments of Ahmedabad ITT as well. I think Ganesh Builder also. Where they said it is a capital receipt not taxable. Because here development right is still yet to come, which had not come. There was no right actually, no right arose practically. So these are the gray area. So what I'm trying to convey, section 28 was amended. I think it was Finance Act 2018. Let me point out that particular clause, you just read it. And I'll just share the background also. 28.2, yes, you look at this. 28.2 says, any compensation or other payment due to or received by. Language, read it minutely. Any compensation or other payment due to or received by. Either actual receipt or it has become due to you. Now read. Clause number E was the amendment. I think it was Finance Act 18. Due to or received by whom? Any person by what or name called. By is receiving? At or in connection with termination or modification of terms and conditions of any contract relating to his business. So he is receiving compensation either for termination or for modification in terms and condition of any contract relating to business. I'll tell you the background. I think maybe you might be aware, very senior chartered accountant here. The background of this amendment was Saurashtra Cement Limited, 2017 Supreme Court judgment. I'm not having citation right now. In that the case was like this, very brief, I'll guide you. The case was, the case was like this, that they had given a contract. So they wanted to import plant and machinery. And there was a terms and condition. One of the terms and condition was that if there was a delay, then they should be awarded some compensation. Percentage, 5% of total value of the plant and machinery. Now what happened? That delay was there. It was a very old case, 1971 assessment year. Delay happened and 5% compensation was awarded. Now we are chartered and we know that it is in relation to what acquisition of machinery. So it will go to reduce the cost of fixed asset. Simple. But AO wanted to tax it and matter carried to Supreme Court. I think it took 30-40 years before Supreme Court, 2017 judgment. Supreme Court also agreed that this will go to reduce the cost of asset. Now, because of that judgment, this amendment took place. And I request you to read memorandum explaining this amendment. In memorandum, they specifically write, this compensation, whether it is capital receipt or revenue receipt, if it is arising out of termination or modification of business contract, it would be taxable. And there is one wonderful lady, I think IRS lady, he had written a comment on this, that what finance minister is doing it. So one very nice article she had written. That you are unnecessarily, you see, you want to tax it. We all agree, if cost of asset will get reduced, then our claim for depreciation will also go reduce over a period of time. So it is tax neutral position. Why you are unnecessarily creating a stress between the normal accounting practice and your expectation to tax this immediately. So this is, I request, the 28 is very important section. Look at few compensation they have given. Very important, I'd like to address this part, D point. Any other item of income. For that, I request you to look at section 2, clause number 24, definition of income. It's very, very wide. And if anything falling under income, and special attention I have written, should be given to subsidy. Subsidy and grants. There was an amendment long back, which subsidy and grant are taxable, which subsidy and grant will go to reduce the cost of asset in view of explanation 10 to section 431. So you should pay special attention to this wherever this exceptional entry comes in your profit loss account. Even any other income, you look at this. Any other income, I recommend two aspects. One is deemed income. Which income? Deemed income, like we just discussed a few minutes before, 222E. What is 222E? Loan or advance given by a closely held company to a shareholder, or a concern where shareholder has got substantial interest. Okay. Now think from the angle of shareholder, because it is an income of whom? Shareholder. Now think of the shareholders' books. Suppose they are under audit. In shareholders' books, what is shown? Liability, because he had taken loan from whom? Closely held company. It is a liability for a shareholder in books, but from our angle, it is what? An income under section 222E. Therefore, be careful. Profit loss account, you see, language is very clear. Amount not credited to profit loss. So this kind of deemed income normally will not appear. I'll tell you one more that I'm supposed to discuss, but orally let me discuss. I'll not travel unnecessarily to save time. तो मैंने 10-15 मिनट मर से लोग आ भी गया बता. They are all here. All panelists here. Okay. So let us take 10 minutes more and then we wind up. This any other income, I request two aspects. Everybody should note down. One is section 41. 41 itself is a set of deemed income. Set of deemed income, and I request you to look at more specifically 41.1. 41.1 itself requires 2 hours discussion. I had an occasion to deliberate on this at Baroda branch. 2 hours. That also I request that separate lecture should be there, because many of the young members, they are not aware of 41.1. It's a deemed income. It primarily says, what it says 41.1? It says that you have claimed deduction of 3 things in past. One is loss, another is expenditure, another is trading liability. 3 words. SSC had claimed deduction of what? Either loss or expenditure or trading liability in earlier year. And this year, there are 2 conditions, either or. That is now Supreme Court in Polyfax has clarified in 2014. 2 conditions, either number A, during the year under audit, you have received a refund. Refund towards what? That loss, expenditure or trading liability, or there is a remission or cessation of such trading liability. If any of this either or condition is being satisfied, then that remission, cessation or refund would be deemed to be your income. You got my point. Therefore, you should take care. Examples are very simple. First is word loss. So you can take it loss due to fire that you had reported in earlier year, and now you received insurance claim in this year, and you are doing accounting in this year. So that would be treated as 41.1 income. Second word is expenditure. You claim deduction of excise duty, GST, it's a deduction. And now you are getting a refund because you protested and you fought up to first appeal, second appeal, tribunal, high court, you got refund. And third is very important, trading liability. The question is that one-time settlement of overdraft facility. That you had an overdraft of 10 crore and got settled for 4 crore. Now you have a 6 crore rupee benefit. Would it be taxable or not? There's a question. So that you should take care of that. There are judgments. Judgment clearly says it is a trading liability. Cash credit facility or overdraft facility is nothing but a which liability? trading liability. Now, first condition says you must have claimed deduction of that. You see, there are two conditions. First condition is you must have claimed deduction, and second condition is either you got refund or there is a cessation or remission of liability. So now a question may arise, first condition, whether it gets satisfied? Are you getting my question? Can we say that I have claimed deduction of overdraft? Just check it out. I'm just giving you open question to all of you. Or you can have a panel discussion. I'll discuss with panel people. They will discuss in detail. But the idea is, this is very, very open close for chartered accountant, clause number 16, where my request is, wherever deemed income word appears. Which word? Deemed to be the income. These all normally will not be through profit loss. And therefore I request that they should be observed. I'll give you one more example. You can appreciate that. 40A3, we all are aware, 40A3, 40A subsection 3. Now, if you read 3CD, let me show you. Yes, here it is. If you read, I'm not reading in detail, if you read clause number A, which refer 40A3, and if you read clause number B, which refer 40A3A, and if you read the language, initial language, opening language is more or less similar. And when I asked Baroda August gathering, only one fellow raised the hand that I know difference between these and that. In Surat, only 2 people replied. I said that, what is the difference between 40A3 and 40A3A? Nobody knows. But people are doing standard reporting for what? 40A3 and same copy paste for what? 40A3A. Because as such, we are not assuming responsibility here. And as such, auditor knows that portlu konu che. Portlu, you understand? Management no portlu che. We are just auditor. But sometimes I found few chartered accountants so aggressive that they feel that they are doing business and they are carrying on business. They fail to remember that they are auditor only. And that way they are really taking interest, extreme interest. Though how many of you know difference between 40A3 and 40A3A? Genuinely 3, 4, 5. How nahi? Congress walo hath vyavasthit. So let me deliberate slightly on this. It is also a deemed income. And always, what is not real? Try to understand. What is not real is always difficult to digest. It is always difficult to digest because department forces you to tax it under which category? Deemed category. That's why we don't love. Normally we don't love. And we do not even able to pay attention to that. What is 40A3A? 43 was, I think, introduced by Finance Act 2009. The scenario is like this. Like we find practically, our article assistant will say, sir, now this is my last year. I am leaving and this audit I am completing. And since first year I am telling that these creditors are opening balance, they remain what? Closing balance. Again, opening balance, they remain what? Closing balance. So, sir, this is last time, at least take some action that this. And we know that this is bogus purchase he had debited long back. And this opening, these creditor remain outstanding because they are signing creditor. They always, Virat Kohli is outstanding, these creditor outstanding, these creditor are also what? Outstanding. They sign like anything in our balance sheet for years to come. Now what will happen? You invite auditee, his account team, and you scold them what you are doing it. At least, sudhro to khara tame yaar. At least something should be done to this. And now what accountant will do? He will apply his mind. He will withdraw cash from bank and he will show what? Payment to creditor. Now what happened in this case? This was done. Matter was carried to, I think, High Court. AO disallowed in the year of payment. Purchase was disallowed by AO. Now argument before the High Court was very interesting that my creditor pertains to 5 years back. Okay. And payment I have done after 5 years. And payment is done otherwise than by account pay check, draft, ICS, or notified instruments. Okay. So ideally, disallowance should not take place in the year of payment because disallowance will take place on the year in which I have made claim. And this purchase I have debited in which year? 5 years before. So disallowance should take place in which year? 5 years before. You got my point. So High Court agreed that disallowance only will take place only for the year in which you have claimed it. That's why department learned from this judgment. They have got one option that they can do 147, but it is very difficult. It is better that during scrutiny, if they come across to this transaction, that payment is done today, for which reduction claim were in pass, then what is the better idea? Better idea is if you violate cash payment or otherwise then by account paycheck, you tax it in which year? Year of payment. That's why what they have written, read. If payment is made this. If not, then it is deemed to be the profits and gains. Under which section? So it is a income of which year? Year of payment. So we need to report. Now this would not be credited to profit loss account. You got my point. This is just an adjustment in sundry creditors account. Just you are repaying it. But there are many deemed income that one should look into it. There is a common question, what shall be done? Because CPC wall is not able to understand. So it is their problem. Our duty is, if it is not reported to, it is not through P&L. And if it is an income, our duty is to report. Otherwise, you recast the P&L, if you can recast the P&L. Last is again, you see open aspect. Can you see? Capital receipt, if any. Koni? Any. Apadi nahi. If any. What are you doing here? You are just making it completely open close. Heading is what? Not credited to P&L. And then what you are writing? Capital receipt, if any. Now there are many capital receipts coming in. Partner's contribution is it not a capital receipt? Now if you write here, what CPC will do? CPC will add entire balance sheet. Am I right or not? So I think what I request that you should go for your, you see closes are open closes as such. So you should take your professional judgment. That is what the request is. But of course, few sections what I have guided, you just again note down 28, 41.1, definition of income, where you read even grant and subsidy minutely. And even definition of income recently, you know this 2023 Finance Act, where is a clarificatory amendment for insurance policy. That insurance policy, certain investment policies are there. They are now to be taxed under which head? Income from other sources. Because this comment I put it when TDS provisions was introduced. That you do not have a mechanism under which head it to be taxed. Even whether it is a capital receipt, is income or not is a big question. So you should just take care of this kind of thing. Let me just give you a brief overview of 43C and 50C. You all are aware. Don't take a risk here. Sometimes chartered account call, sir, may I escape this even if purchase is, sale transaction is below circle rate. No, you should not escape it. You must obtain the proper document and report it. 43 I have dealt with. Then 14 and Rule 8D. Now it is not much relevant, but I'll tell you, Rule 8D, you should not report it. I have come across certain audit report during this appeal work that chartered accountant on his own, he write Rule 8D calculation. Why? If you read law minutely, section 14A, 14A is clear that either SSC claims that no expenditure has been incurred in order to earn exempt income or income which does not form part of total income. So either no expenditure has been incurred or expenditure incurred where AO is not satisfied with the correctness of the claim of SSC. Then AO will invoke which rule? So these prerogatives of AO, we should not become AO. If SSC says that no expenditure is incurred and reasonably you find it okay, then you write nil, that's all. Let AO to invoke Rule 8D. Why? You give calculation on your own. Unless SSC himself would like to disallow, then it's fine. If SSC is agreeing, I'd like to add it from my side, then you okay, then you do calculation. There you should mention it, that it is difficult to ascertain, but SSC himself had agreed for Rule 8D, that's why calculation is given. Ideally, it is AO's job, we should not do it. Just read that section also. 48.2 is very interesting. I'll tell you, it is very difficult to report under 48. There are 13 categories. How many? 1, 3. Where related party payment appears. 1, 3. If you'd like to read it in detail examples, I appreciate Taxman publication, Vinod Kesingania. Just read it. All illustrations are given. 13 categories. Therefore, what ideally we should do it, if you are doing audit of Mehul Thakkar, every Thakkar is a relative of what? Mehul Thakkar. That way you finish it. That is the best and safest view. Because your coverage is larger one than what 48.2 says. You got my point. Your coverage would be a large, but ideally you should have a perfect detail what 48.2 expected. So you should read it. 41.1 already I have said in detail, condition 1 and condition 2. Then comes 41.5, okay, that is 56 already I deliberated. 269 ST, which is also a big challenge for us. That I think Tele will help you, but you look into it, 269 ST. Then this is also very commonly I found in WhatsApp group from young members. they do not look into section 79. And they help people in acquisition of business. And with a calculation that we have got this much accumulated loss. Despite they studied it, but because of various pressures and professional, our commitment toward GST, those who are doing GST, so then they forget this. So you must look into it, section 79. These are exceptional clauses. So what I'm requesting, that before you finalize audit, at least these clauses you should look into it. That am I not falling, am I falling or not falling? Unnecessarily, because our problem is, we are software driven people nowadays. So what we do is, when we prepare tax audit report of this year, what we do you want to carry forward earlier report? We simply say yes. Moment we carry forward, definitely we may be in trouble in reporting. That's why I have prepared a list. You just go through this, that whether this year, this special clause is applicable to my client or not. Then comes very important, explanation to 73. Those who are doing audit of a company, maybe a private or limited company, if in their principal business is not trading in shares, I repeat, their principal business is not trading in shares, be careful, even though they have taken delivery of shares, still that business will be taken as speculative business. Therefore, you have to check it out. This explanation, very, very important. Kindly read it in detail. I'll repeat. If your client is a company, number one. Number two, their principal business is not a business of dealing in shares or loans and advance or a banking company. Then their trading in shares, their purchase and sale, if it is of business magnitude, then any loss arising therefrom is which loss? Speculative loss. And there are many judgments on that. There is no exception. Exceptions are very limited given under this explanation. This is an exceptional clause. One should look into it. 4 exceptions are there. 222E is an again exceptional case. Excise service VAT, I am not going into it. And last is Form 61, 61A, 61B, that you all are aware. I am not investing time on that. It's more of procedural aspect. So with this, I end my session. I am thankful to all of you for a patience hearing after lunch and remaining present here in a large number. I am thankful to Lord Almighty, who had given me wonderful mind, body and soul, so that I can deliberate, discuss. Thankful to the branch, always inviting on and often for giving my thoughts with you. Thank you.